what are the risks in this? Because people know no risk, no reward. And obviously there have been, some people who've been burnt by either doing small trades themselves or by investing with the wrong people. But those two things having been spoken for, what are the other major risks?
I think before we address the risk, Gareth, let's just go back into the provenance of our business and our trading strategy and why it works, because this will speak to the risks that we are going to address right now. But our hedge fund background essentially allows us to operate at a very sophisticated level in finance. We have achieved multiple financial services licenses, and as such have been able to get an asset management license, a foreign exchange intermediary license. And with the knowledge of trading, and that being Dave and Ashton and Warren, who all come from a deep pedigree of trading backgrounds, they have navigated market risks for their financial careers. Now, the big risk we got here is counterparty risk. We are essentially one of the primary counterparties. So you're trusting in us, a regulated financial service provider, I believe the most regulated in the crypto arbitrage space, and probably the longest serving for that matter. But we're accountable to the Reserve Bank, we're accountable to the FSCA. And as such, there's a whole lot of reporting and compliance work that we are obliged to do and maintain. So there's nothing nefarious that we can do because we're very much in the public eye as well. So it's down to counterparty risk. And counterparty means all the bells and whistles and the various service providers that attach themselves to our strategy. So who are our counterparties? These are exchanges and OTC providers, over the counter, who we have worked with for several years and have built faith in them because they have navigated the last 2 years, 3 years in the crypto space that has been horrendous, from the crashing of Terra Luna, Sam Bankman-Fried at FTX in October, the run on the banks, Silvergate in February. And how did our counterparties operate in that time? Were they exposed? So the due diligence process is as deep as we possibly can do. And it's also how we behave. What did we do in those instances? We got out the market. We don't like the market, but we don't think it's too frothy. We get out. So we're discretionary asset managers with a deep background in trading derivatives, equities, forex, and crypto for that matter. And with that knowledge can trade macro environments and exploit them better than most people who are simply running an algorithm or a code to do the arbitrage.